All right, well, welcome to this quick webinar on why trading isn't working for you. It's going to be hosted by me, Julian Lewis. I am the master day trader and trading mentor here at J. Lewis Trading, and today we're going to be talking about why trading isn't working for you. So we're going to go over this quick risk disclaimer real quick. Leave that up one moment for you to go over, and we will move forward. So, why trading isn't working for you? This is something that a lot of people don't want to touch on, and I actually want to get into this. I want to get into the nitty-gritty as to why trading isn't working for you, things that you might be doing wrong and things that we can improve on, and I want to get into why trading isn't working for you, and at the end I want to offer you tools that can get you on the right path with achieving consistency in trading. So the big thing about why trading isn't working for you is because, like most new participants, you don't have a clue what you're doing. Now, this is a bit crass, and I apologize, but it's the truth. Most people that come into trading off the top don't have a clue what they're doing. There are some truths here that 90% of new participants fail to achieve success trading. Failure rates are at 90%, and some actually suggest that failure rate is actually higher. So why most traders lose money is not surprising. I'm just going to read this word for word. More often than not, trading decisions are not based on sound research or tested trading methods, but on emotions such as a gut feeling, emotional attachment to the company, etc. Some traders feel the need for entertainment and hope to make millions of dollars from home while working just a few hours a day. What new traders seem to forget for whatever reason is trading is a profession that requires skill and skills that need to be developed. So you need to constantly be working on your craft as a trader. There is some truth to the fact that most people don't do that and won't do that. So therefore, be mindful about trading decisions that you make and your overall view on trading. Don't expect to be a millionaire by the end of the year, but keep in mind that the possibilities are out there to be quite successful. Keep in mind possibilities trading online have. So the bottom line is new traders fail because they simply don't know what they don't know. They wing it and fail. Their failure is based on not having a tested trading strategy. Those are the people that make up the 90% failure rate in trading, and again, could be even more than that. But these are the people that move away from trading and never return to the greatest wealth building machine ever known to the developed world. In most cases, the losses acquired could have actually been invested into their education to understand how they could survive and succeed in the financial markets. So my principal point to you is don't become part of the 90% that fail. Now you're going to probably ask, how do I avoid becoming part of the 90% that fail? You need the holy grail of trading. It's that simple. The one thing that all veteran traders have. It's what 90% don't have, and it's what you need to stay in the game. It's the holy grail of trading. And now your question is, what is the holy grail of trading? The answer to that is net positive consistency. The one thing that a trader absolutely needs to have to succeed in trading long term is net positive consistency. So what is net positive consistency and how is it achieved? Net positive consistency is being able to trade the markets over a period of time and achieve a positive P&L statement. P&L standing for profit and loss. Even with realizing negative trades and losses over time based on a positive yield curve, your capital accounts should grow. Now, here's the thing about trades that go against you, losses, negative trades, etc. It's part of the game. You have to get over real quick that you are going to lose trades, and that's okay. What we're going to do here is get you to a place of consistency where your winners are much larger than your losers, and that will afford you a net positive P&L statement at the end of the month. So now, how is consistency achieved? Consistency is achieved by engaging high probability situations over and over again where there is a greater multiple of reward to risk. What this means is understanding patterns that embody high levels of potential energy that can possibly explode and experience a high level of short-term volatility. Now, based on understanding patterns and their propensity for breaking out, we can then pinpoint opportunities before they actually happen. Consistency is achieved over a series of trades, maybe 10 or 20, where you're winning more than you're losing on a trade-by-trade basis. Your reward multiple has to be at least 3 to 1 reward to risk. If you're going to risk 5 cents, you need 15 cents of upside, for example. I want to give you some insight into this particular stock. This is MARA, M-A-R-A. This is a low float stock that you can see I traded on a 1-minute chart. Now, the time is cut off, or the price point is cut off a little bit right through here, but you can actually see that this level right through here where price action broke out, this was trading at $1.80. Using the strategy that we trade, this actually not only broke out, but it rallied up to $2.70. So there was roughly 1 full point of price action movement, 1 full dollar of share appreciation. Simple terms, if you were to put a 1,000 share position on in the morning time, you would have made $1,000 trading this stock intraday. Again, this is on a 1-minute chart, and this is one of the many day trades that I've put on. The full video is in the members area, and it's something that you can watch moving forward. This is MARA. This is another stock we traded. This is DGLT. You can actually see in the top left-hand corner that on a daily basis, on an intraday basis, this was up 435%. What we were doing was using a very, very proprietary method of looking for stocks in a specific area and then watching for a very, very specific pattern. And you can see on this particular chart, price action actually squeezed this apex, and it was squeezed so tight that it broke out of a key level of resistance and blasted from 62 cents up to $1.05 in the afternoon. It was a massive move. It was a very successful trade. We also have a full trade video about this in our trading library. And then just to cap this, we got CNET. This is another monster trade that we put on. These are all day trades, okay? This broke out actually just over $3.50. That's $3.50. And in the whole session from 12 to 3 p.m., this thing rallied up to $12. It was a massive mover. Point is, we've achieved consistency trade over trade over trade, looking for something very, very specific and trading something very specific based on a proven strategy. So, what is the first step to achieving consistency? Well, having a well-tested strategy. Now, we've just talked about it. Having a well-tested strategy that over a 20, 30, 40, 50 trade basis produces positive net results. And that's what having a well-tested strategy is about. And that's what you need. Now, there are 3 key points to a well-tested strategy. Knowing where to find opportunities and knowing which opportunities is the best at that moment in time to trade is key. This comes from specializing and focusing on one key market or style of trade. Do you trade stocks? Do you trade options? Are you trading bonds? Are you trading ETFs? Are you trading Forex? Are you trading cryptos? You know, these are the things that you need to know with respects to specialization, and then getting to know what you're trading, then looking for high probability situations such as pattern recognition with flags and triangles and head and shoulders. So key point number 1 is knowing where to find stocks or vehicles to trade, and then which one am I going to trade based on number 2, understanding how to react to potential opportunities through pattern recognition. Examples of high probability patterns are flags, triangles, and head and shoulders. Now, I trade primarily flags and triangles, but head and shoulders is also a very, very high probability situation that can be employed while trading. The third thing is executing a trade using a pattern recognition execution strategy. This is what I call an STF system: setup, trigger, follow through, which gives you insight as to how to enter a trade, where to focus on risk, and where to break out of the trade based on a trigger, and where price action will follow through. And these are all logical profit-taking exit strategies that are overlaid on that as well. So I want to give you another example. This is a shot of a pre-market scan that I actually had not too long ago. And you can see right through here that MICT was a stock that I was watching that averages out about 100,000 shares traded a day. Pre-market, this was trading 7 times that, and it was up 53%. What I knew off the top was to watch this stock and then overlay my STF system, setup, trigger, follow through, with a very specific pattern, trigger point, risk profile, and follow through model. Now this is just a quick overview of the patterns that I trade. These are flags: bulls, bears, bull triangles, bear triangles, and a bull and bear triangle are going to be based on lead and trend, and then of course head and shoulders. Here's another example of a triangle that I traded right through here. Now, I did tweet about this. I'm at JLewis Trading. You guys can sign up and watch me because I do tweet quite a bit. But what you can see right through here is we had this situation where price action was starting to move up, and it squeezed right here at this apex, taking out a $3 resistance level and running straight up to $3.44 before pulling back. Now, you're talking about a 44-cent move within a matter of about half an hour. Again, just a 1,000-share position, and you would have made $440 just on this one trade. TEUM. You can see that the setup and the pattern is virtually identical. This was just the flavor of the day, so we traded it. And you can see that it broke out right through here at just shy of $1 and ran straight up to 126, grossing 21 cents of value on this trade. So achieving consistency can happen a few different ways. The most common attempt to achieving consistency is trying a number of random strategies with little to no success, then finding something that works after a significant period of time. Now, this can be both time-consuming and very expensive. It is possible, but very unlikely. Most new traders actually fail within the first year. The real challenge that most newer participants have: no proof of concept. They have no track record. They've got nothing viable that they can lean on. So we all know that trading works, but the big question is, how does it work? And how can we be consistent? What you need to do is to save time, save money, and that'll come by working a system and a strategy that has a proof of concept. So a simple example of this is one of my students, Kenny. I mentored him about 4 years ago, and when we met, he was a retired firefighter who was trying to manage his own money, and to no avail. When we talked, he was consistently losing money. After a few mentoring sessions, I was able to turn his trading career around and help him get to a level where he was trading profitably. All he needed was a proven strategy, and I gave that to him. Now, you can see right through here, this is actually some of the public feedback that Kenny has given me on Twitter, a very, very public social media platform, and you can read right through here exactly what he was doing based on the trading strategy that I taught him. And this isn't a one-off situation. You can see actually this is another client of mine that buzzed me directly, and he wanted to share this message through WhatsApp. So he and I were communicating, and he just said, hey, listen, last 17 trades, 12 of them were profitable. Finished my 3rd week in a row with profits. 3 weeks of profits is achieving consistency. I asked him what system he was using. He said the JLewis trading system. It's the only one I use. Here's another client of mine. Made 60 cents on MYND. 60 cents doesn't sound like much. 1,000 shares, you've just made $600, and you can see that he used the JLT system. And this is something that I actually retweeted. Kenny, again, made a 219% return on some put contracts he was trading, and I went out there and I said, top J. Lewis trading student, did it again, can't stop, won't stop. Proof of my strategy produces consistent profits for those who trade the system correctly. And this is the truth. If you trade my system correctly, you will achieve consistency. Again, Luai, and this is a dedicated student, using the JLT strategy, he made 30 cents trading intraday. Kenny again made $3,400 on some Apple contracts that he traded. This is, again, there are other tweets here that aren't listed and telephone conversations that aren't listed either. One of them where I helped Kenny make about $7,000 intraday. I think he ended up making $40,000 on that month trading this particular strategy. Now, if you want to follow me on Twitter, there I am, J. Lewis Trading on Twitter. By all means, get connected with us and see what we're doing. We're pretty active on J. Lewis Trading on Twitter. So keep in mind, with all my students, all I do is I give them the tools to be successful, and I show them a system that I've been successfully using for years. That's all I do. I break it down for the guys step by step. I show them how everything works and how to apply it in real time. Trading truly is not rocket science. So aside from thoroughly explaining how the system works and showing how it works, I also offer all of my students ongoing support. And that is the real kicker that helps these guys get to a level of consistency, is that ongoing support. So the fact of the matter here is that trading is a lonely profession that most people go out alone with little to no success or support. And unless you have the tools to survive, you will inevitably become prey for the apex traders that run the game. Aside from the fact that 90% of traders fail, 99% of aspiring traders waste too much money into training that yields little to no results. If you're watching this, you might actually be in that category, regrettably. You know, training tuitions, as I'm sure you know, run from $4,000 to $5,000 and up to $10,000. And in some outrageous cases, push the limits up at 50 grand. This is commonplace, and these prices are astronomical. The unfortunate thing, too, about a lot of these situations is that for every new level reached, yet again, another charge is applied to continue training. The upsells don't stop. There are promises of magic indicators that will solve all your trading problems, or talks of patent-pending trading technology that is going to change the game, or promises of a path to financial independence within just 90 days. Guys, it's all fiction. It's not real. Those things do not exist. Now, I want to make something perfectly clear. Although J. Lewis Trading Academy specializes in tailor-made mentoring programs that focus on one-on-one trading, that offer ongoing support, we have short-term goals of getting students to a place of market literacy and consistency and profitability. That's not what I'm here to discuss today. What I'm here to discuss today is why trading isn't working for you. It's important to remember that successful trading is viable. Successful trading is about knowing what to do and when to do it. It's about trading a system that has a track record of success. Trading isn't working for you because you don't have a proper execution plan. You don't have a defined strategy. And you might not have insight on where to find trading opportunities and how to take advantage of those opportunities. So you're clearly in need of help, and you're searching for the truth about trading and how to achieve success. That's why you're here. That's why you're watching this video. You represent a group of people that want to take control of their situation and become successful and consistent with trading, among other things.